everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today we are diving into a report from Akamai Technologies and we'll see if they are amending their loan agreement or just amending their reputation. Akamai Technologies filed what's called an 8K form. Companies use these to tell investors about big important changes that could affect the company. Think of it like a corporate bat signal. This report is dated April 17, 2025. That's the date the event happened that they're telling us about. It's like the breaking news date for this corporate story. Akamai Technologies is the company we're talking about. They're officially based in Cambridge, Massachusetts. The main point of this report is that Akamai changed its credit agreement, which is their loan deal with some banks. The original deal was signed in November of 2022. Now, they've made an amendment number 1, which is basically like a version 2.0 of the loan. What did they change? Well, they took out something called a credit spread adjustment that was used for SOFR borrowings. SOFR is a benchmark interest rate. It is used to calculate interest, so it's like updating the formula for how much interest Akamai pays on the loan. Removing that adjustment could mean they're getting a slightly better deal, or it could just be a simplification of the loan terms. If you really want to get into the nitty-gritty details, you can find the full amendment as Exhibit 10.1 in the filing. It's basically the official legal document. The report also mentions that this change to the loan agreement means there's a direct financial obligation. Basically, Akamai owes money under this loan. Nothing really new since they already had the loan, but they are just saying that officially. The exhibits listed include the actual amendment document and something called an interactive data file. It's just the technical stuff used for filing with the SEC. So what's the big picture here? Akamai tweaked its loan agreement, specifically removing a credit spread adjustment related to a specific interest rate. This probably simplifies their borrowing terms and might save them a bit of money. Not the most exciting news, but important for understanding Akamai's financial situation. Now let's step back and see what this all means for Akamai. On the surface, this amendment seems pretty minor. It's a tweak to their existing loan agreement, not a brand new borrowing, but small changes can sometimes tell a bigger story. Is Akamai in a stronger financial position now than they were when they first took out the loan? Removing that credit spread adjustment could be a sign that the banks see them as less risky now, or maybe it's just a reflection of changes in the overall interest rate environment. Akamai is in the content delivery network, cybersecurity and cloud service business. That business has been competitive with the emergence of new players. Given that interest rates have gone up significantly since 2022, removing the spread adjustment may be a necessity that doesn't signal anything necessarily positive about Akamai's financials. Looking ahead, this loan amendment is something to keep an eye on. If Akamai continues to make moves that simplify their financial obligations, it could be a sign that they're focused on long-term stability. On the other hand, if they start taking on more debt or making riskier financial moves, that could be a warning sign. So in conclusion, this 8K report is a small piece of the puzzle when it comes to understanding Akamai. While the loan amendment itself isn't earth-shattering news, it does give us a glimpse into the company's financial strategy and how they're managing their debt. Thanks for watching. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to leave a comment with any other companies you'd like us to decode next.